Welcome back to Investing Talk podcast. Today we're diving into one of the most intriguing and maybe perplexing corners of the market, quantum computing. Specifically, we're putting Rigetti computing under the microscope. The big question we're tackling for you today is Rigetti computing a good time to buy now? We've gathered a stack of sources, a really comprehensive stock analysis, actually to distill the most important insights for you. Helping you understand Rigetti's financial health, its market position, and, well, where it might be headed. Think of this as your cheat sheet to understanding this pretty wild stock, giving you the clarity you need. And hey, before we really unpack it all, if you find these deep dives helpful, please do hit that subscribe button, give us a like, maybe leave a comment, and, consider buying us a coffee. Your support really is what keeps these deep dives coming. Okay, so to figure out if Rigetti is a good buy, we really need to look at it from, well, every angle. Let's start with the absolute bedrock, the company's fundamentals. What do the core numbers tell us about Rigetti Computing's health right now?
Right. So fundamental analysis, it's like giving Rigetti a financial MRI, basically. We're looking past the headlines, trying to see its underlying health. And what's immediately striking, in our sources regarding their revenue growth and profitability is a pretty clear pattern of declining revenue growth paired with significant net losses.
Significant how?
Well, we're not talking small red numbers here. The company reported a negative $137.67 million in net income.
Oof, $137 million negative.
Exactly. For any company, especially one looking to attract long-term investors, this indicates a very real struggle, a struggle to achieve profitability. It's a critical flag, really.
Yeah, that negative $137 million figure is certainly hard to ignore. Given those substantial losses, my next question is kind of obvious. How are they funding this? What do their debt levels and cash flow tell us? Are they just burning through cash like crazy?
That's a crucial point, and honestly, it's where our sources are somewhat less detailed. They don't give explicit figures on Rigetti's current debt levels or, specific cash flow trends. But those consistent, significant net losses, that $137 million deficit we just mentioned, well, that tells us one thing pretty clearly.
What's that?
Rigetti is undoubtedly consuming cash. They have to be, which implies they'll likely need to raise more capital down the road.
Right, maybe by issuing new shares.
Often, yeah, through issuing new shares, which, could dilute the value for existing shareholders.
The classic dilemma for growth stocks.
It really is. It's sort of the cost of doing business in a nascent, capital-intensive industry like quantum. However, it's also important to step back a bit and remember Rigetti's core focus. They're deep in quantum computing, very deep. And this positions them in a highly competitive and rapidly evolving sector, which, despite its current challenges, holds just immense future growth opportunities.
Okay, so on one hand, they're kind of bleeding cash, but on the other, they're in a field with potentially explosive growth. That's a fascinating dichotomy, isn't it? Can you tell us more about where Rigetti actually stands in this cutting-edge quantum computing sector? What gives them their edge?
Rigetti has definitely carved out a distinct niche for itself within the quantum sector, which, let's be clear, is still in its very early innings. Very early.
Right.
Their competitive advantage really stems from their specialized hardware and services. They're developing quantum processing units, or QPUs.
The brains of the operation, basically.
Exactly, the literal engines of quantum computers. And beyond the hardware, they offer quantum computing as a service, QPS.
QPS, okay.
Yeah, this means they're making their powerful quantum capabilities accessible to businesses and researchers through the cloud.
Ah, so you don't need to build your own quantum computer?
Precisely. Imagine renting access to a supercomputer before most people even knew what a supercomputer was. That's kind of Rigetti's play. It gives them a unique position in a market that's, well, embryonic, but promises to reshape industries.
Okay, so we've examined the company's financial engine, its health, and its position in the quantum race. Now, let's talk about how the market is actually valuing this company. Are investors paying a huge premium for that promise, or is this maybe a hidden gem? How do the valuation metrics stack up?
Right, valuation. When we look at Rigetti's valuation, it certainly presents an interesting picture. For starters, we can't even calculate a traditional price to earnings, or PE ratio.
Because of the losses we talked about.
Exactly. Negative earnings mean no meaningful PE. That's a fundamental indicator right there of current unprofitability. However, we do know their market capitalization stands at $4 billion.
$4 billion, okay.
While their annual revenue is just $9.21 million.
Wait, $4 billion market cap on $9 million in revenue?
Yep. If you do the math, That gives Rigetti a price-to-sales PS ratio of roughly 434.
Wow. 434 times sales. That's staggering. For most companies, that would be a massive red flag. What does a PS that high truly tell us here?
Precisely. That PS ratio isn't just high, it's through the roof. Astronomical. It signals that investors aren't buying Rigetti based on its current earnings or even its current sales. Not at all.
They're buying the dream then.
They are buying a dream. It's a pure, unadulterated bet on a revolutionary future. This valuation basically screams high risk, high reward. You're essentially buying into the potential for groundbreaking tech breakthroughs and future market dominance, not, current financial performance.
So comparing it to other tech companies is tough.
Very tough. It's difficult because there just aren't many established, publicly traded quantum computing companies to serve as direct benchmarks. Rigetti's valuation is really a reflection of its early stage, high growth, and deeply innovative nature. And while our sources don't give us a specific discounted cash flow analysis, this current premium pricing, it's a clear indicator of the market's belief in the long-term transformative power of their technology.
That makes perfect sense. Investors are clearly looking way beyond today's balance sheet. Okay, shifting gears now from the sort of theoretical valuation, let's talk about the stock's actual trading behavior. What's the market doing with Rigetti Computing right now? What kind of ride has this stock been on?
Oh, Rigetti stock behavior. It's been nothing short of a roller coaster, seriously. Over the past 52 weeks, the price has swung just dramatically, from a low of 66 cents.
66 cents?
Yep, 66 cents up to a dizzying high of $21.42.
That's incredible volatility.
It's less like a steady climb and more like, extreme mountain biking. Thrilling, maybe, but with some incredibly steep drops. As of our sources, the recent price has been hovering around $13.75.
Okay.
Which actually means it's down about 37% for the year so far.
Down 37% year to date, even after that run-up.
Correct. That significant volatility is really a defining characteristic of this stock. You have to expect it.
That's quite a ride indeed. So for people considering a trade, what are the key levels they should be watching? Are there clear support and resistance points that might hint at its next move?
Yeah, traders always look for these critical points. Our sources identify recent support around $13.32, meaning the stock has, tended to bounce up from that level recently.
Okay, $13.32 support.
And resistance is noted at $14.24. That's where selling pressure has historically pushed the price back down.
Pretty tight range there.
It is. These narrow bands suggest ongoing price instability. The stock is still trying to find its footing, its equilibrium in the current market. Beyond those immediate levels, we can look at broader trends. The 50-day moving average, which is, the stock's average price over the last 50 trading days, is currently at $11.29. The 200-day moving average, which gives a longer-term trend perspective, sits at $8.02.
Ah, so the 50-day is above the 200-day now.
Exactly. And the fact that the shorter-term 50-day average is now above the longer-term 200-day average, that's often seen by technical traders as a golden cross.
Right, a bullish signal usually.
It suggests a recent upward trend, potentially sustained buying momentum, And one more indicator, the 14-day Relative Strength Index, or RSI. It's at 58.33.
Okay, what does that tell us?
Well, the RSI is a momentum indicator, ranges from 0 to 100. Above 70 is often seen as overbought, maybe due for a pullback.
And below 30 is oversold.
Right, suggesting it could be due for a bounce. So at 58.33, Rigetti is kind of pushing towards the bullish side. It indicates increasing buying pressure, but it's not yet at those extreme overbought levels, sort of neutral to slightly bullish momentum.
Okay, so we've covered the numbers, the charts, but sometimes the most powerful forces are, well, the intangible ones. News, general sentiment. What's the latest buzz around Rigetti Computing? What are people saying that might be influencing things?
There's definitely some notable buzz, One key piece of news that recently gave Rigetti stock a bit of a lift, even with that broader year-to-date decline, was NVIDIA's CEO commenting that quantum computing is reaching an inflection point.
Jensen Huang saying that carries some weight.
It really does. It's not just a random quote. It's a powerful signal from a tech giant, suggesting the foundational work in quantum is maturing, maybe opening the door for more serious investment, more collaboration, which could fundamentally change Rigetti's trajectory,
Absolutely. What about analysts?
The analyst community seems quite optimistic, actually. Our sources show a strong buy rating from analysts covering the stock, and they have a price target averaging around $14.20.
Okay, so confidence there.
Yeah, it conveys a pretty strong sense of confidence in the company's future prospects. And interestingly, even while the broader market's fear and greed index might be indicating general fear, the overall sentiment specifically around Rigetti appears to be, well, bullish.
Huh. So the quantum believers are holding strong.
It suggests that despite wider market jitters, those following quantum computing closely, they see real potential here.
So an underlying current of optimism, even amidst the volatility and, let's face it, the challenging financials. That's a fascinating contrast. Looking ahead, what are the key events on the horizon? What could truly impact Rigetti's stock price? Any upcoming catalysts investors should watch for?
Well, the most immediate and probably significant upcoming catalyst for Rigetti is their next earnings report. It's scheduled for August 7, 2025, according to our sources.
Always a big day for any stock.
Especially this one. These reports are crucial because the stock price can react, sometimes dramatically, based on the reported performance, particularly regarding those ongoing losses and, importantly, their future guidance. Any sign of progress towards profitability or maybe increased revenue will be intensely scrutinized.
Makes sense. Anything else?
Beyond earnings, yeah. Continued advancements in quantum computing technology itself. Any new product launches or developments from Rigetti would absolutely act as significant catalysts for growth.
Like tech breakthroughs.
Exactly. We're talking about breakthroughs in things like qubit stability, computational power, or maybe landing new major partnerships. These are the kinds of milestones that can fundamentally reshape investor perception and, consequently, the stock's valuation.
Okay. Now, every investment, no matter how exciting or promising, comes with risks. We have to talk about those. What should potential investors be keenly aware of here? What are the potential pitfalls? What could go wrong with Rigetti?
That's a critical question, host, especially for a company like Rigetti. It's essential. First, on a stock-specific level, the high volatility we've already discussed, that's a constant risk. It just means significant price swings can happen fast, which can be, well, exhilarating, but also financially punishing if you're on the wrong side.
Definitely need a strong stomach.
You do. Then there are the significant net losses we covered earlier. The company is consuming cash. And as we inferred, this points to a very real potential for future share dilution.
Where they issue more stock to raise funds.
Exactly. Which can devalue existing shares. It's a common risk for companies in this phase. Then, from a sector perspective, quantum computing itself is highly speculative.
Still very early days.
Very early. It's bleeding-edge technology subject to rapid, unpredictable technological changes. What's groundbreaking today could literally be superseded tomorrow. It's a race, and frankly, not everyone wins these races.
Good point. Any other risks?
And finally, you can't ignore the broader macroeconomic level. Economic downturns. They can significantly impact investment in emerging capital-intensive technologies like quantum computing. Investors tend to pull back from high-risk ventures when times get tough.
Right. Flight to safety.
Exactly.
Yeah.
So you're not just betting on Rigetti the company, you're also betting on the continued evolution and funding of an entire nascent industry.
Okay, expert. So bringing all of this together, the tough financials, the genuinely groundbreaking tech, the market buzz, the volatility, and those very real risks. What's your ultimate verdict? Is Rigetti Computing a good time to buy now? And maybe, who is it for?
All right, the big question. Considering everything we've unpacked, I'd give Rigetti Computing an overall rating of, say, 6 out of 10.
A 6 out of 10. Okay.
Yeah, and the rationale is quite balanced, really. The high volatility, those significant losses we keep mentioning, and the highly speculative nature of quantum computing. They definitely pose substantial risks. This isn't a stock for the faint of heart, let's be clear.
Definitely not.
However, you have to weigh that against the company's truly innovative technology. They're doing interesting things. And you have that strong analyst support we saw, which collectively offer considerable growth potential if.
The big if.
Big if they can execute on their vision and their strategy. For those considering an entry point, maybe looking to dip a toe in, our sources suggest the best entry price range appears to be somewhere between $12 and $13.
So a bit lower than the recent price.
Yeah, it offers a more conservative entry, gives you a bit more of a buffer, theoretically, while still maybe capturing potential upside if the stock does move higher.
Yeah.
Now, as for who this stock is for, given the extreme volatility, it's really better suited for short-term trading, potentially. You need to be prepared for those dramatic swings. Manage risk tightly.
Okay.
That said, it may offer a long-term growth potential. but that's heavily reliant on the company's ability to successfully develop and commercialize its quantum computing strategy.
Which, as we said, is a big question mark in such a new field.
A very big question mark.
Yeah.
If you're considering trading it, some specific guidance might be useful. Think about setting a stop-loss order, maybe below $11, to limit potential downside.
Protect your capital.
Exactly.
Yeah.
And maybe look for a take-profit target around $15 to capture some potential upside, given its speculative nature and the recent price action.
Right. Don't get too greedy with a stock like this.
Prudent advice.
This deep dive into Rigetti computing really highlights that dual nature of pioneering industries, doesn't it? You've got this immense world-changing potential on one side, but also the very significant kind of stomach-churning risks on the other. So as you, the listener, think about Rigetti computing and whether it fits into your portfolio, consider what your personal tolerance for that kind of cutting-edge speculation truly is. It's not just about the numbers on the screen, right? It's about investing in a future that's still being written, and whether you're comfortable with the wild journey it might take to get there.